This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Help wanted. We're coming off the strongest job growth in 15 years. But there's one big problem with this December jobs report.
Roadblock removed. A legal ruling clears the way for the Keystone Pipeline to proceed. And the House of Representatives approves its bill, setting up a showdown in D.C.
Out of favor and ready for a comeback. Our market monitor has a list of neglected stocks that he says are ready to rise. All that and more tonight on Nightly Business Report for Friday, January 9th.
Good evening, everyone, and welcome. Today, stocks did what they've done all week. That is, register a triple-digit move on the Dow Jones Industrial Average. This one to the downside. Now, there were plenty of reasons why. Oil slid again. The December jobs report was generally positive, but some traders focused on weak wage growth. Meanwhile, investors couldn't help but watch nervously as that three-day terror rampage in France came to a deadly end. 4 hostages and 3 terrorists were killed in 2 locations as French authorities moved in. 1 suspect remains at large. Here's how the markets looked at the close. The Dow fell 170 points, the Nasdaq lower by 32, and the S&P off by 17 points. For the week, all 3 indexes were down by about 0.5%. More now on that December to remember jobs report. A more than forecast 250,000 jobs were added last month, and the nation's jobless rate ticked down 2 notches to 5.6%, the lowest in more than 6 years. But the report wasn't all positive. Hampton Pearson takes a closer look.
2014 was the best year for hiring in 15 years. More than 2.9 million Americans have found jobs in the last 12 months. The unemployment rate is at a 6-year low, but wages, now at about $24 an hour on average, actually fell last month. And wage growth for the year is just 1.7%. Leading economists, however, expect wage pressures to increase.
25 states in 2015 are planning to increase minimum wages, and you're going to get some kind of a pop in wages related to that.
Job growth was widespread, including high-wage sectors like construction, which added 48,000 workers. Professional and business services, which includes accountants and architects, actually led the way, with 52,000 new employees. The unemployment rate fell, however, because many jobless workers gave up looking for work and are not counted as unemployed. And the labor force participation rate, Americans working or looking for work, dropped to 62.7%, a 37-year low.
I think what we're seeing is the long-term unemployed continuing to withdraw from the labor force. That's why I think it's important that we have targeted policies to keep the long-term unemployed searching for a job.
The cross-currents of the job market were clearly visible today at this jobs fair targeting the hiring of veterans. A top recruiter for an auto repair business says he's feeling the wage pressure to hold on to his best workers.
Over the last several months, I've noticed we've offered several pay increases to our technicians, and that's just how the business is.
Recently retired from the military, Pete Karusich has been out of work for 4 months, but sees signs the economy is improving.
My take is you're a one-man economy. You got to put yourself out there and find the best thing that you can find.
As for the Fed, stagnant wages adding to already low inflation has some monetary policymakers in no rush to raise interest rates.
We shouldn't be raising rates before 2016. If things transpire as I'm expecting, employment's been good. I've been expecting that. I'm hoping that inflation's going to pick up, and I think we need to see more of that.
3 million more people earning paychecks, along with lower gas prices, is putting more money in consumers' pockets, and that increased spending in the coming months should give a further boost to the job market. For Nightly Business Report, I'm Hampton Pearson in Washington.
Let's get more now on today's jobs report from Ethan Harris. He is co-head of Global Economics Research at Bank of America Merrill Lynch. Good to see you again, Ethan.
Thank you.
How worried are you about the 2 negatives in the report, the participation rate and the wage growth, or that lack thereof?
Well, the lack of wage growth, I think, will be fixed as we start to see a much lower unemployment rate. When we get down to around 5% or so, I think workers will finally start to get some negotiating power. So I think the weakness in wages is behind us, and we'll start to see an improvement in the year ahead. The workers abandoning the labor market, the drop in the participation rate is more of a long-run issue. It's been a big movement. It takes a lot of productive people out of the economy. It hurts our tax base. I'm very concerned that we've taken a permanent hit to some degree in terms of our working population.
Why is that happening, do you think, Ethan? Is that because, as the popular wisdom would have it, these are discouraged workers who have basically given up, or they're just not happy with the wages they could make? Or do you think it's demographic? In other words, a lot of baby boomers moving out of the workforce?
Yeah, I mean, it's a little of both, and we hope that it's mainly temporary. It's certainly the case that it's been a miserable job market to look in these, if you've taken, 1,000 resumes out there and you get no interviews, you're going to stop looking. So that should improve, and those people should come back as they see things improving. Pickup in wages will also draw people back. But some of this is permanent. Some of this is people retiring early and probably never coming back into the market. And then there's, of course, the general aging of the baby boom population. But it is a challenge for the economy going forward. If we have less workers going forward, we have less people to support the Social Security system and so on. And so there's a little bit of a dark cloud there in that report.
Right. What about growth overall? You're a little bit above the street's consensus for growth. Tell me why.
Well, I think that the U.S. economy is finally coming out of what we've been calling a rehab recovery. I mean, we had the worst banking and real estate crisis in modern history. You always get a very slow healing process coming out of those kind of crises. Adding to the pain, we've had constant austerity and brinkmanship moments in Washington with tax increases, spending cuts, fiscal cliffs. This is all very bad for confidence. The good news is both of those big headwinds, I think, are behind us now. I think we'll see a more normal budget process in Washington. We won't see any new shocks out of Washington. And the banking and real estate sector are in much better health. I think we're ready, and we're already showing signs of healthy growth in the United States.
On that optimistic note, we'll leave it there. Thanks, Ethan.
Okay.
Ethan Harris
Thank
with
you.
Bank of America Merrill Lynch. Ty?
And falling once again, oil prices ending lower for the 7th week in a row, even after data showed the biggest drop in the number of U.S. oil drilling rigs in 24 years last week. Today, domestic crude finished 43 cents a barrel lower, ending at 48.36. Benchmark Brent crude closed at the lowest level since April of 2009 at around $50 a barrel.
Also today, a major ruling that could mean construction on the Keystone XL oil pipeline will resume soon. Nebraska's Supreme Court overturned a lower court ruling blocking the proposed route of that controversial pipeline in the Cornhusker State, clearing the way for construction to now move forward.
And also today, the Republican-led House overwhelmingly passed a bill authorizing the completion of that Keystone XL pipeline. The Senate will take up its own version of the legislation next week, where it's almost certain to pass. But the bill is anything but a done deal. John Harwood joins us now from Washington with more. John, the president has already said he will veto any Keystone legislation if it passes Congress. But could today's ruling by Nebraska's Supreme Court either change that promise or flip some wavering Democrats, particularly in the Senate, over to the side of voting in favor of it?
I don't think so. I think the Nebraska Supreme Court was simply a delay in the process. It wasn't something where the substantive outcome was likely to influence anybody's vote one way or the other. Now, what you have in the House is a vote today that was well short of what you need to override a presidential veto. We expect the Senate vote will also be short of that number. So Republicans can put pressure on the president through this vote. They can't make him do it. However, because the president, and I think we've talked about this before, Tyler, is not outright opposed to the pipeline, I believe what's likely to happen is a period of negotiation in which the president says, you want Keystone? What are you going to do for me?
Well, what would happen out of that? What kind of negotiations might take place? What's on the table? Where's the wiggle room?
Well, the president, Sue, has got a lot of alternative energy priorities. Just one example, the wind energy tax credit is something that is due to expire very soon. The administration favors it. Republicans have been skeptical. That's the kind of thing. The other steps the president has taken to try to increase gas mileage of cars, to reduce carbon emissions, to act on climate change while also moving us to a different energy basis, wind, solar, cellulosic, all those other things. I think the administration would be open to a conversation that would involve some of their priorities being affirmed if, in fact, Keystone were able to go through.
All right, John, let's turn you to another story also out of D.C. that we want to get your read on. The White House proposing a $60 billion 10-year initiative that would pay for 2 years of community or technical college for any American as long as they keep up a 2.5 grade point average and they work towards a degree. Now, that plan calls for states to pay for a quarter of that cost, with the federal government paying the rest. What are the chances, John, that that initiative gets any funding from Congress?
Not great, I don't think, Sue, even though it was promising for the president to be joined in Tennessee for that speech today by both senators, Lamar Alexander, who's going to be the top Republican on education in the Senate, and Bob Corker. This reflects the administration's look for ways to raise long-term living standards of the middle class, which have been stagnant for so long. And a lot of people think that making sure that quality community college is available to train people and get them matched up to the jobs that our evolving technology-based economy needs is a key to the future. Now, whether or not this passes Congress or not, the fact that the president's elevating the priority to it, as many states, including Tennessee, with a Republican governor already are doing, is a sign of where policy in the country is headed. It's going to be tough, though, to get a new spending entitlement program through the U.S. Congress.
John, thanks. Appreciate it.
You bet.
John Harwood in Washington. And still ahead as we continue bargain hunting for blue chips. Our market monitor tonight found some, and he says they're ready to bounce.
California is aiming for the record books with the biggest state budget proposal on record. On the heels of 2 years of budget surpluses, California Governor Jerry Brown now proposes a $113 billion budget for this year, the biggest one ever for any state, anytime, anywhere. The plan calls for more social service programs, but less funding for the University of California system than the schools had requested.
An activist is looking to shake things up at DuPont, and that's where we begin tonight's market focus. Trian Fund, which is the hedge fund run by Nelson Peltz, announced plans to nominate its own slate of 4 directors to DuPont's board as it tries to push a breakup of that company. The industrial conglomerate said that it would review the selections made by Trian. Shares were off by more than 1% to $73.50. Steve Madden warned its investors that its performance over the holiday quarter was slower than expected, so its 2014 profit won't meet Wall Street estimates. It blamed the slowdown at the West Coast ports, among other factors. Despite that, the shares rose nearly 2.5% to $32 a share. And Infosys reported a 13% jump in quarterly profits for its latest quarter, beating expectations. The India-based software company improved results by winning more contracts from Western businesses. The shares were up 4.5% to $33.56.
Starbucks announced that its chief operating officer, who helped lead the coffee chain's massive and very successful restructuring, is taking an extended unpaid leave from the chain to spend more time with family. Shares fell more than 3% to $79.79. Some changes at General Mills to tell you about. The food company is cutting another 500 jobs with the closing of 2 Pillsbury dough factories. That's a lot of doughboys out of business. This adds on to the nearly 1,400 job cuts it announced last year as it aims to improve profitability. Shares were down 1% to $53.03. Google already has its hand in many industries, and now it might be selling insurance. One analyst says the search giant will debut an auto insurance shopping site. On the service, consumers would be able to compare and buy policies. Class A shares of Google off 1% to $500.72.
Tonight's Market Monitor is a value investor who likes large cap stocks with high dividend yields, low price to earnings ratio, and very little debt. He is Randall Ely. He's president of the Edgar Lomax Company. Welcome. It's a pleasure to have you here, Randall.
And it's a pleasure to be here. Thank you.
That sounds like a pretty good recipe. You know, little debt, good price to earnings ratio, good dividend. What sectors of the market do you find some of these stocks in?
Well, we're finding that the long-time theme of the last shall be first, or at least will probably be first. We're finding that energy and telecommunications, which were the worst performing sectors of the S&P 500 last year, are probably the place we're finding the most undervalued stocks right now.
Interesting.
This feels a little bit like the dogs of the Dow theory there, Randall. Let's start with one of your picks, AT&T, with a very plump yield of 5.6%. Boy, just to own that stock and get 5.6%, you can almost count me in on that. Why do you like it?
That's right. It's 3 times the 10-year yield, or the 10-year Treasury. But this is a company, it's the biggest telecom company in the U.S., and most people forget it because it's not in a glamorous sounding business.
And you have a price target of about 57 on that stock, correct?
Oh, that's right. Almost a double.
Wow. All right, let's move on to ExxonMobil, and that plays to the energy play that you mentioned to us a little bit earlier. What's your price target on this? And, you know, it looks like it's ripe for the picking because it's been so beaten down.
That's right. Here, we're looking for more than a double. I mean, this stock, we would not consider it overvalued unless it was almost $190. The product they sell, we all have to use. There's no choice about it. Also, as the price of oil falls, and most observers seem to believe that it will continue falling, the seeds of eventual rise are being planted because you have the market increasing and supplies falling.
Randall, your third choice is another company. I'm happy to say I know all 3 of the companies you're picking tonight. And if either of the first 2 companies hurt me, I can turn to the third one for Band-Aids, Johnson & Johnson.
You probably wonder how we make money with these stage-sounding names.
Tell me about Johnson & Johnson and why you like it. You got 120 as the price target on it.
That's right. Similar to Exxon, we all have to use their product, but here you have a growing market, and that's aging Americans. That despite all of our problems, and you notice I'm including myself there, still it's a relatively well-funded market segment. So I think you have safer earnings, and as a result, we don't have to look for as greater returns since we think the returns will be more solid even in a recession.
All right, you named 3 names that have some pretty good price targets on them, but what about the overall market? What kind of a year are we going to have in stocks?
Well, I think I certainly don't expect a bear market anytime soon, but I think the market is at least fairly valued, you know, in the long term. And I'm not looking for the kind of sharp rises we've had over the last 3 or so years. You look at 2013, for example, with the S&P 500 up 30%. I would not expect to see that regularly in the next 2 or 3 years.
You know, your fund was up about 15% last year. That was better than the S&P 500, and there were not many managers that were able to do that. What worked well for you last year, Randall?
It was primarily companies like the healthcare companies. It was the Johnson & Johnsons, the Mercks. We also had a substantial position in IT and for technology, with Intel being a big holding of ours. So that stock that 2 or 3 years ago people thought couldn't bang his way out of a wet paper bag, it really came through with a rise of over 40%.
Randall, thanks so much for spending time with us. We appreciate it. Have a great weekend.
Thank you for having me.
Randall Ely with the Edgar Lomax Company.
And coming up, the upstart Uber changed the face of transportation. Now another upstart looks to give it a woman's touch.
Nearly 2 months after the violence and looting that ripped apart Ferguson, Missouri, some of the city's small business owners are still trying to rebuild and recover, and they're getting help from some unexpected sources. Kate Rogers has more from Ferguson.
I was shocked. I went into shock.
I felt totally violated.
Scary. You don't know where to go.
Juanita Morris, who has been in business for nearly 30 years, watched the location she had in town for a decade burned to the ground on the news.
I had no idea that they were going to burn the store. I feel a whole lot of other people was hurt by this.
But luckily for Juanita, a college student named Eric Lee also saw her business being damaged on TV. He reached out to Juanita and helped her set up a crowdfunding page on GoFundMe.com, an online fundraising platform. To date, Juanita's raised nearly $23,000 on GoFundMe. She has plans to move from this location you see behind me, where really nothing was salvageable, to a new spot in town she just got the keys to yesterday.
I thought that really the internet would be a really powerful tool to make a difference.
The internet has also proved to be a powerful tool for Dawn Marshall, who owns Faraci Pizza. Protests and threats of violence outside her store caused her to change her hours because customers couldn't get into the restaurant. Facebook promotions helped the store to sell out for the first time in September.
We love our customers, our community. It's like a family here.
Then there's Bryant K. Mitchell, who refused to miss a day of business despite riots that filled the streets just footsteps outside his door. The fitness instructor simply boarded up his windows and persevered, holding classes daily despite unrest. He's just taken out a small business loan from the St. Louis Economic Development Project to attempt to regain some of the business he lost.
We were very cautious, we were very vigilant, but we were not scared. This is our community.
Bryant says his business logo has taken on a more literal meaning.
Our logo is "You'll Survive," and that logo has taken on a totally new meaning. It's a universal message now. You'll survive, and we have. And the community here in Ferguson is going to survive as well.
A city that lost so much is ready to move forward. For Nightly Business Report, I'm Kate Rogers.
New York City requires a license on its taxi cabs called a medallion, and the prices paid for those medallions are now down almost 30% from their peak back in 2013, which was at that time above $1 million. Why? Well, tight credit is one reason, and the rise of the apps like Uber and Lyft directing riders to black cars. Our latest bright idea is a new competitor app driving female customer traffic and creating new jobs.
It's amazing that you make more money as a taxi driver than your profession.
In October, Nancy, who asked us not to use her last name, signed on to drive for SheTaxis, a new app-based service run by women, aiming to attract a female clientele. And Nancy is just one of a couple of hundred female drivers who have come on board.
I said, wow, that's for me.
The drivers can choose to use the SheTaxis app while they're on the road, even as they work for existing car services, just as they might with Uber. When a customer books a car through the app using a credit card, SheTaxis keeps a proprietary percentage of the fee. The rest goes to the driver. Some drivers, like Nancy, are only working with the app because business has been good for them. SheTaxis helped Nancy get licensed and also helped her figure out how to buy a new car. But Nancy is not an employee. She is in business for herself.
It's flexible schedule. You are your own boss.
SheTaxis founder, Stella Mateo, says she often wished for a service like this to help shuttle two daughters to after-school activities.
You always feel that, your children are safer because of the mother instinct with women.
Mateo, a career accountant, concedes SheTaxis is not profitable after 2 months, but she's got high hopes to expand into other cities, possibly as soon as next month. She got the idea after noticing car services for women were flourishing outside the United States. And in New York City, where there are 50,000 taxi, livery, and black car drivers, only about 5% are women.
The fear factor, I think, was a big factor why women were not part of this industry.
Fear? Sure. Back in the 1990s, there were about 60 driver homicides a year in the United States. Things are better now. Since 2009, that number has dropped to less than 30 a year.
I don't think that in the past this would have worked.
In New York City, more than half of all taxi riders are female, and Mateo sensed an opening, betting that women are more comfortable riding with female drivers.
I understand the demand is there, the supply is what's not there.
The original plan was to run a service for women only, but that could have run into legal challenges. Men can use the app, but they must be accompanied by a female if they request a woman driver.
The men that do call are calling interested for their family members, either daughters, wives, sisters.
SheTaxis did catch the attention of civil rights attorney Norman Siegel, quoted in newspapers reminding everyone that a business can't pick customers or employees according to race or gender.
If there is a male who wants to drive and is denied that opportunity, or a male who wants to be a passenger and is denied that service, we would speak up and give serious consideration to filing a claim.
So far, that hasn't happened, and customers like New Yorker Bianca Lacayo seem to appreciate having a choice.
Being with a woman driver gives you freedom. If you need to change from business attire to evening wear, it's 1, 2, 3 process.
The need is there. If you do a poll, you'll see ask 10 women, and 9 out of 10 women are going to say, yes, I welcome it, and they're happy.
So we did. And all 14 people we found on a chilly afternoon in Manhattan offered a thumbs up.
It would give us a sense of security.
I think that's a great idea.
Yeah, it's not a bad idea.
I think women don't often get an opportunity to drive taxis, so yeah, why not?
Great, because we can't do it by ourselves. We got to have the women there. I think that's a beautiful thing.
And if you happen to get a ride with Nancy, expect to make a new friend, too.
I make them talk no matter what. I'm very friendly. Woman to woman, that's all it takes.
Services available in New York City, the surrounding area as well, but inside the city limits, the SheTaxi company is called SheRides because the city regulates the way the businesses can use the word taxis.
Taxi.
You've got daughters. Would you feel more comfortable with a female driver, or does it matter to you?
I think I might, actually. I think I might.
You would
Usually
be a target
it's just my dad,
customer.
my husband and me driving the kids around, but I think I would.
Yeah, interesting. All right, there's the story.
That's it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
I'm Tyler Matheson. Thanks from me as well. Have a great weekend, everybody. We'll see you on Monday.